Hello and welcome to our channel. My name's Charles Delastic. I'm the Managing Director of Bluebond Tax Planning, and today's video is all about the 6 estate planning actions you should take now. If you haven't planned your estate, you may find that actually this area is more important to you and your family than inheritance tax planning. So without further ado, we'll get into the actual video itself and go from there. Thank you. Hello and welcome back. Okay, as I explained before, this video is all about the 6 actions you should take with regard to your estate planning. And why I've said now is because really it's never too early to deal with these kinds of things, because unfortunately none of us know when we are going to die, or fortunately, who knows. Okay, so let's get into that. So here's the 6 actions. So the very first one is reviewing your will. So if you've got a will, then you should have reviewed it. If you haven't reviewed it for a few years, maybe you should look at it to make sure that you've got the actions that you want carried out on your death going forward. So make sure that's being reviewed and that's an up-to-date document. So while you're reviewing your will, you may want to consider doing a new will rather than just keeping the old one or making odd adjustments to your old one, because there are some major benefits to writing lifetime trusts within wills, and we will explain that in other videos to do with lifetime trusts themselves and how they work. But there is a major benefit, so look on the channel and you'll find there's other videos around that subject. So a new will with lifetime trust would be a sensible idea. The second thing to do is to leave clear instructions. Now, what do I mean by clear instructions? So, been doing this for more than 20 years now, and quite often when clients die, there are issues in the family, you know, how much should we spend on the funeral? Should it be this? Should it be that? And there's all sorts of stuff going on, and obviously the emotions are running high at that time as well. So it will help your family if you leave absolutely clear instructions down to what you want, how much money maybe you want with a spent on a funeral. You may even decide to have a prepaid funeral plan, so it's all redone. Sounds a bit macabre, but actually it does save an awful lot of time and hassle. And really, you know, on your death, your family should be remembering you rather than getting agitated around money and should mum or dad be buried here or there or cremated or what all the issues are. So make sure that clear instructions are left. Right, so as I said, it's instructions around the funeral that tend to be big issues, but also around documentation. Where is your documents? Where are they kept? Ideally, you've got some documents with your will, and strictly speaking, what you should also be doing is leaving clear instructions with your will that if your estate is of any size, to contact your financial planner. And really, most people don't appreciate that contacting a financial planner before they contact lawyers is a sensible thing, because lawyers will deal with the legal aspects of dealing with your probate and everything else like that, but they won't deal with the tax aspects. And sometimes how that's dealt with has an ongoing implication in how assets are dealt with and what the best thing to do is with different assets. So we always tell our clients to contact us firstly, and then we advise them how to move forward, because obviously we have a fair amount of experience in dealing in this scenario, unfortunately. Okay, number 3. LPAs. So that stands for lasting powers of attorney. So you can do these yourself, or you can get a professional to help you. Really, it's up to you. And there's 2 different ways. So let's go into it, and I'll explain what those are. So number 1, everybody should have a financial LPA. Yeah. So it doesn't matter about the size of your estate or anything else, because if you haven't and then bank accounts get frozen, even if your spouse is still alive, there will be financial issues to deal with. So making sure that you've got an LPA is a sensible thing to do. Now, normally we are saying to clients, do it online. Yeah, it sounds a bit weird that as a company we do this for people and then we're saying we'll do it online. Well, to be fair, if your children, your adult children are sensible, or you're capable of dealing with it, then go right ahead. Because if you do it online, make sure it's done properly. There are certain clauses that you need to be a little bit careful of, but check those out. And then once you register it, if there's a problem, then the act of registration will let you know if there's an issue. So a financial LPA can be done online, and I don't see the point of charging clients things that they can do themselves. So we offer the service for people who don't have children, or their children live abroad or whatever, or they just want hand holding in dealing with it, but it can be done directly online. So the other form of LPA is the health LPA. So we would certainly recommend these for people who don't have children and want to make sure that how they're dealt with if they are going to a coma or have a terminal illness or whatever. But if you have children and you trust them to take the right action on your behalf, then I don't see any major need for a health LPA. But that's up to each person, obviously, to decide. Right, so this section, life policies. So what's that about? So if you've got any life insurance plans or whatever, who have you nominated as the beneficiaries? Is that still relevant? Are those policies in trust? Because if you die and the policies aren't in trust, then the insurance element will pay out, and they'll pay out to your spouse directly, which then means, or to your children directly, which then means it forms part of your estate, and then it's liable for inheritance tax. So that would be silly. So you have to make sure that you have all life policies written into trust. And then the other aspect to consider is the what if scenario. So you said, okay, I want the money to be, if your spouse has already died, I want the money to be paid out to my children in equal measures. Well, what happens if one of those children predecease you? Have you put that in the instructions to the trustees of your trust? So it's leaving clear instructions around what you want to happen with life policies, and if the person that you intend to leave it to predeceases you, or actually they don't need the money, a review makes complete sense. Right, point 5, pensions. Exactly the same scenario works around pensions. So there is a death benefit within pensions, so make sure that you've nominated who you want the money to go to. And again, it may not necessarily be your spouse. So for most of our clients, because they tend to have quite big pensions, we recommend that they put the death benefits of those pensions to a trust. So why is that? Well, if it isn't and it's passed out to your spouse, then of course it forms part of her estate for inheritance tax purposes, etc., etc. So although a pension is already in trust, it pays to talk to an experienced practitioner about whether it's sensible to place a secondary trust, so that the trustees of the pension scheme know who to pay the money out to, and more often than not, it's better going to a pension trust. So that's a death benefit trust, and that's exactly what we've just explained. So the next section, last but not least, it may not surprise you to learn, you should definitely look at your inheritance tax planning. What have you done with that? So again, in the inheritance tax videos, I always point out about making sure that you've done your calculations correctly. It's not what your estate is today that counts, it's what your estate is when the second person dies. Now, although you don't know that, if you just took national statistics and you said round about 83, 85, depending on what your health is, then how much could your estate grow to that point? And really, if people consider how much their house was worth 20 years ago to what it is now, probably more than doubled. That could potentially happen again, and therefore dealing with inheritance tax liabilities early is essential if you don't want to pay the tax. So, as I pointed out there early, there's no such thing as too early when it comes to dealing with inheritance tax. It makes sense to do it as early as possible, because then you know what you're dealing with, and also you've got time to make decisions, and you've got bigger and wider options as to how to deal with it. If clients approach us when they're in their late 70s and 80s, sometimes it's a little bit difficult because we're not sure if they're going to live for 7 years. So reviewing your will, leaving clear instructions, making sure you've got LPAs, sorting out life policies with the beneficiaries, making sure the beneficiaries of pensions are correct, setting up an extra trust around your pensions and your life policies, and lastly, making sure you've done your inheritance tax planning, are all things that you should consider doing straight away with regards to your estate planning. Your family will thank you for making sure that you have tied these things up and that it's done sensibly. So thank you very much for listening. If that video was useful to you, then please give us a like down below. If you want to know more about estate planning and inheritance tax, we do offer an in-depth ebook which is completely free of charge, and there's also a very comprehensive video tutorial on estate planning and inheritance tax which is available from our website. Again, you'll find the links down below. So thanks very much for listening, and goodbye for now. Thank you.